Afternoon. Welcome to Thinking is Contagious. Been about a week since I did my last program, and I wanted to touch base. Probably going to be doing a little more often once again, but really political news has been kind of quiet, and there really hasn't been that much that has really sparked my interest as to what's going on. Today, the Putin Biden uh, summit ended. Um, and really a bunch of rhetoric. Putin and Biden basically pointing fingers at each other. Uh, Biden calling out Russia as to human rights violations, and Putin saying that the United States does the same thing, um, arresting of dissidents, and Biden says what's going on with that in Russia, and Putin saying what happened January 6th. Those were people expressing themselves too, and you arrested them. The back and forth, the usual garbage. Nothing's going to come of it. And Putin knows. I mean, he knows he's dealing with a weekend at Bernie's. He's dealing with a puppet, and he's dealing with someone that has really no ability to negotiate. Why would you do anything with Biden when you know that he's going to have to go back with his tail between his legs and ask the guys on the left if it's okay? So, a lot of nothing. Supposed to run 5 or 6 hours. I think it ran 3. That tells you everything you need to know. They were projecting a 5-hour summit, and it ended up with 3 hours. So you know that Putin has total disrespect for Biden and anything that Biden has to bring to the table. And that's how most of the world is going to see Biden. He's a puppet. Weekend at Bernie's. Anyways, what I really wanted to talk about was a little bit about the money situation, the markets, the financial situations. And again, I am not a financial planner, so I'm going to give you my opinions and my views on things here. I'm pretty studious. I'm pretty hell bent and driven when I get into something. I do research it. So there's I believe there's some good basis for what I'm about to tell you. But again, not a financial planner. Do your own research. Talk to your financial people. Make your own decisions. Do your due diligence. Never invest money that you need. That type of scenario. But a couple of points. Cryptocurrencies. I'm a big believer in crypto. I do believe it's the future, and I believe more than even the crypto itself, the vehicle of the blockchain is the future, and it's a great investment in my opinion. Blockchain, artificial intelligence, robotics, autonomous driving, genomics. I believe all those things are tremendous investments. And if you have a 5-year window time frame plus 3 to 5 years, even 3 to 5 years plus of patient money that you know you're not going to need. If I was to address where to invest that money, and I'm putting my money where my mouth is, I am invested in those things, and I believe that is the future 100%. But I want to really go to the manipulation piece, and it's so constant and consistent, and I've learned the hard way. It's burned me pulling out of things because trying to be cautious. I can remember one not too long ago, Plug Power, which is a charging a stock that has to do with electric vehicles and the charging of said vehicles and the facilities for charging. And stock was just went from nothing from below $1 to $8, $9, $10, and started catching favor and wind. And I got invested in it, and the stock rose into the 30s. And a story comes out and basically says that their books are cooked, they're fraudulent, and the stock tumbled back down below $10 very rapidly, very rapidly. It turned out it was all a bunch of lies, a short sellers manipulating, sending out false rumors, false lies, telling lies to knock the stock down in order for financial gain. You're seeing it with the meme stocks. constantly. These called meme stocks. I don't know if you've kept up with the GameStop and AMC and Bed Bath and Beyond and BlackBerry, and you're seeing this manipulation and a new creation of a new marketplace. That's not where I play. I don't invest in those things. But my point is more the general markets and what you get today when you listen to these financial networks, when you listen to CNBC, when you listen to Fox, when you listen to Bloomberg, when you listen to all these networks. I've come to the realization that what they're doing is pitching. What they're doing is selling you. What they're doing is trying to direct the narrative and take you to a certain point to manipulate the markets, and allow those that fund them their opportunities. Let me give you some thoughts on that. I watched the other day Andrew Ross Sorkin. He's a guy on CNBC in the mornings, and he has an interview. And he's a liberal. He's a writer for the New York Times, and that's fine. You want to be a liberal, you can be a liberal. But his points of views are so left, and he comes out and he says that basically that Bitcoin is a large part of its existence is for illegal uses. By nefarious underworld drug dealing and ransoms and kidnappings, and before 2010, which is when Bitcoin I think got founded, or 2008, 9, whatever it was, I think that there was blackmails and ransoms, and as a matter of fact, less than 1% of all these types of crimes involve cryptocurrency. And as a matter of fact, as proven by the last hack, the Commonwealth hack, it's actually easy to trace because of the blockchain technology. They were able to find out where that money went, and they were able to seize back most of that money. You're not going to do that with dollars. So what happened? Bitcoin has been pounced upon by the media, by the big platforms, by those that missed the ride to 60,000. The Warren Buffetts, who 5 years ago said it was a scam and would never get involved in it, now he is. Those people realize that because of their stubbornness, because of their really arrogance, because of their lack of open-mindedness, which is a big part of the liberal platform, isn't it? Open-mindedness. Well, because of all those things, and they're claiming that cryptocurrency was a scam, they were wrong. They were outsmarted by those who believed in it. And what did they do? They said, we may not be able to go back to when it was $50 or $100 or $10 Bitcoin, but let's take it down as far as we can so we can jump in again and ride back up to 60. And that's all that's happened here. And that's all that will happen. It's happening with other stocks and equities as well. You see these stories, DraftKings this week, that they're involved with the underworld, money laundering, shorts. Those are people who are shorting, who need the stock to go down. I've learned the hard way, and I'm going to try to relay this to you at this point so that you don't make the same mistakes. Research, due diligence. There are no shortcuts to investing. Find the equity, find the stock, find a product, find a company that you research, you believe in, you think it has a future. Look at their balance sheets. Now, doesn't mean that because a company's not making money is not a good investment. There's many ways to value a balance sheet. There's many companies that have huge cash flows, and what they're doing is reinvesting every penny into research and development, into their technology, in order to assure future growth, parabolic growth. Then there's other companies who have cash flow, have strong balance sheets, but they're taking their money and what are they doing? They're doing stock buybacks, and they're increasing dividends, but they're not investing in technology and growth and the future. Many people like those stocks. Many people call them value stocks. I think you have to be very careful where we are today when you look at value stocks. When you buy stocks for dividends, value stocks, doesn't mean all dividend stocks are bad. I happen to be a big advocate of IBM. I think IBM is a great company, but IBM is a company that's investing in technology. They've continued to pay their dividend. The stock has really gone up over this calendar year, quite a bit. But IBM spent a decade where it did nothing, and it's been very out of favor. And it's only now that the analysts are beginning to look at it. But they did the formula that we talked about. They're reinvesting. They are going into tech. They're reinvesting in technology. They're investing in technology. Excuse me. They are very involved with the blockchain, and their future is bright. And they've turned the company around. It's not like it's the old axiom that they say it's not your grandfather's or your father's company. Well, this is not your father's IBM, and like that, there's many. Jamie Dimon, CEO of one of the great CEOs in this country, of one of the great banks in this country, came out the other day and actually he made a comment about Square, and he basically said that Square beat him to the punch, that they were more innovative. He said we could have done what Square did, but we weren't as forward thinking. And I'm paraphrasing, but look it up. So he acknowledged that he got beat to the punch by Square, PayPal. There's so much going on right now, and I listen to these people who come on the air and manipulate. A perfect example is today. Today the Fed will discuss Chairman Powell will discuss the findings of their latest meeting at Jackson Hole, which today at 2 o'clock they're going to talk about it. And the market is expecting really very little, if any, new news. CNBC decided at noon to put on Jeremy Siegel, who was a professor at the Wharton School. He's an elderly gentleman, but he's got a great background and a great resume. And he came on and started saying that he thought that the Fed was going to make statements regarding tapering of their asset purchases and inferring about rate increases down the road. And the market tanked. The Dow was up when he started speaking, lightly, very lightly, 20, 30 points, a decimal of a percent. And when he was done speaking, it was down 100 points, which again, it's not a big down, but it shows you the manipulation of this thing. And what I need you to look at when you look at things like this is understand that the people that you think that are on TV, that they're experts, they may be experts, but they deliver the message they are paid to deliver. I think that if you look, and you all know, those who know me know that I'm a big proponent of the ARK ETFs, Kathy Wood's funds. They've actually labeled her stocks because there's been an attack on her all year. And their attack is because last year she returned 150% on her funds. And she went against upstream. She went against what your Fidelity and what your I don't want to single out Fidelity only, but all the big, I'm losing the trend, but all the big houses, the JP Morgan, everyone who recommends stocks, her stocks that she recommends are growth, disruptive technologies. And you didn't find any of the major Wall Street firms pushing any or many of her stocks, most of her stocks, maybe one, a couple here or there, got some traction. And she basically cleaned their clock. So now, when in February, March, you saw the 10-year Treasury start going up, the yield going up to about 1.75, that affects companies without earnings yet quite a bit because the projections are based on growth. And she started taking a beating, and she probably came 30% off of her highs from last year. But those of us who have been with her for years, a couple of years, yeah, it's hard to lose 30% of your gains, but when you're up 150, 200%, it's part of the territory, and you stay your ground, and you remain with what they call diamond hands. You hold. And that's what we've done, and it's rebounding again 10%. But I find it funny how they label now. You go on CNBC and you listen to them talk, and they're called the ARK stocks. Those are her funds, the ARK stocks. It's a negative connotation. It's like the meme stocks. They all have labels. The liberals love the left loves to label things, to divide you. And they're being made look bad by ARK has led to the label, the ARK stocks, and it's used in a very derogatory sense. Those are stocks that, when you listen to the narrative through which they're delivered, they're stocks that are viewed as speculation, a roll of the dice, a crapshoot. Far from it. Far from it. He has extensive research. There is so much work done. If you listen to the webinars, if you listen to the information that they provide, this is researched. This is well researched by brilliant people. And are they right all the time? Absolutely not. They're going to miss a lot of misses. But what happens is that when you hit 20, 30%, 10x's, and you do status quo for 30, 40% of your portfolio, if 25, 30% of your portfolio bombs, you're still way ahead. But what happens is, instead of acknowledging that, the people who have taken that stoic, traditional, listen to us because we have 40 years of experience and we know what's going on, and past history indicates that this is what's going to happen, and these people are crazy for betting on these disruptive technologies. This is a huge risk. Well, you know what the biggest risk is? The biggest risk to a portfolio is not taking any risk. That's your biggest risk, is playing it safe. So you got to take what you're told on television by these financial networks with a grain of salt, and realize that what they're trying to do is create market volatility so that they and the people that butter their bread can take advantage of that market opportunity, because they have endless capital to throw at these things, and they want to go in safe. So they won't go in early and take the risk. But when they determine that the risk takers were right, and have made them look foolish, what they will do is do whatever means is necessary to bring that platform that the risk taker invested in, bring that equity that the risk taker invested in, bring that company that they invested in, and bring it down as far as they possibly can, so that they can jump in at that point and ride it up 30, 40, 50%, because they're very happy to accept those types of returns, guaranteed. Remember, they didn't take that initial risk. They get in after the fact. They get in late, but they make sure they knock it down as far as possible to build in that instant equity. That's where you get these short sellers. That's where you get these rumors, these stories that come out about corruption and bad balance sheets. And that doesn't mean that all of them are incorrect. Some of them, yeah, there is some fraud out there, but it's very little. Very little. Most publicly traded companies are very well vetted, okay? And you're being manipulated and being scared and being coerced into running for the hills with any kind, as soon as there's a little bit of volatility. Warren Buffett said the stock market is the vehicle by which the patient take the money of the impatient. Now, it doesn't mean that you foolishly look the other way when a stock is having a problem, an industry's having a problem, okay? You don't do that. You realize if there's an issue, there's an issue. But rumors, stories, in order to drive stock prices down, understand what they are. Is those that want to get in without having taken that initial risk, realizing that they missed the huge upside, say, that's fine, knock it down, give me 30% equity. At the end of the year, I can report to my investors a 30% return. Everybody's happy, but we don't want to take the risk. The risk takers, on the other hand, are the ones that are rewarded. And that's where you get your ARKs. Depends how you want to invest, depends on where you want to go, depends on what your objectives are. My personal belief is 10 years from now, these disruptive technologies will have changed your and my world, changed everyone's world. And that's where I want to be invested. That's where I want to put my money. Not all of it. You know, there's what they call the barbell. Okay, very aggressive, offset on the other side by somewhat more conservative. Now, how more conservative? You know, that's up to everyone. Some people have bonds in their portfolio. I have some bonds, and I've really been cutting back tremendously on municipal bonds. I realized I made a mistake. It was my mistake. But a balanced portfolio, not all your money needs to be in disruptive, aggressive technology. I think a portion of your money should be in it. And it depends, again, your age, your ability to take risks and to live, the stress levels that you can live with or not live with. But I feel pretty confident telling you that if you look at the history of equities in the United States, it is going to outperform any other asset, including real estate, by the way. You know, and I've been in real estate my whole life, those that know me, 40 years. You know, when you really factor in the cost of real estate for the retail investor, I'm not talking about, you know, opportunity guys who buy distressed assets, turn them around. That's a different ballgame. But the retail investor, when you factor in what you pay in taxes, what you pay in insurance, upkeep and maintenance and repairs, vacancy, and when you factor in all those things and then the appreciation, and I know we've had tremendous appreciation, but you know, if you're making 2-3% a year on real estate, appreciation wise, historically, and you're making probably, I would say, 5 or 6% cumulative over the life of your asset. I think that being invested in United States equities is a better option, and I'll tell you why. Even if real estate provides a little better tax ramifications and a little bit of a better net in your pocket income, the liquidity that you have with equities and the, if well researched, well documented, well vetted as far as where you're investing in, I think the potential for rapid appreciation is better. And again, that's my opinion. Nothing wrong with real estate. A lot of people made a lot of money in real estate, um, but in my opinion, it does offer you the leverage situation and the tax benefits. I understand that, but uh, I think in the long run, I think you'd be hard pressed to beat U.S. equities as far as performance is concerned over a very long period of time. Anyway, I hope that it's a little bit of change of pace what we talked about here today, and I'm anxious to see what Chairman Powell's comments do to the market. I fully anticipate the market to tank. I've been telling my friends since early in the week to expect a tank Wednesday, Thursday. I thought it was Thursday actually when the results, but it's Wednesday. And to me, it will be a buying opportunity. So, good luck. I hope that you got something out of this, and I look forward to hearing from you. Any comments that you may have, if you like this, approach, if you like this direction, if you like the commentary and the subject matter, let me know. Thanks, and have a good day.